Facebook stock continues to move higher. They just got an upgrade from Citigroup, and they got some good news out of China. It's hard to believe that when this company went public that it fell so hard from its original IPO price. Now it continues to move higher. So the question is, what do we do here? Joining me is Scott Redler from T3. Scott, you and I talked about this stock back in August, and you gave a price target that seemed like it was going to be kind of hard to hit very quickly, and it hit it very quickly. So let's talk about that August 20th call.
Well, on August 20th, the chart pattern was really tight. We were in August, the market was pulling back. You had a really nice earnings report that people embraced, and it ignited higher. So when we sat down, I wanted to go over another potential play. So if you look at the chart over there, which shows you, look at that cup and handle pattern. Sometimes they developed differently, but this one had a descending channel that ignited to the upside. So when we spoke, you saw that flag type pattern. So you saw a nice consolidation while the market was pulling in. So if you look at that measured move with that double arrow, that was the depth of the cup to the actual handle, which equated to a move to about 46.
So when we look at the stock today, it's really hard to figure out, do I put fresh money in because it's gone up and it keeps going up? We got all these upgrades out there. Again, this news out of China that they were banned. Now they're not going to be banned. All good news. But if you've got money in there, do you take it out? And if you have fresh money, do you put it in here? It's very confusing what to do at this point.
Well, we always talk about how entries and exits matter, okay? And there's a lot of valuation guys out there that are comparing the valuation to Intel. How could it be so expensive? How could it be comparing it to IBM, whatever? Okay, what you want to do when a new issue comes public over the first few years is look at the trends. So if you look at the trend since we spoke on the chart here, you will see that tactically it's been unbelievable. Ever since I think we were talking about 38, it's been riding the 8-day moving average, giving you multiple entries as a trader. So even if you got out, you were able to get back in. So yesterday, even with the market down, it closed near the high. So maybe somebody knew that they were going to get the censorship listed in China. But at this point, it is extended. I actually sold mine yesterday. It doesn't mean it can't go higher. If you didn't buy those 6-7 entry points, and if you're going to just put a new position on above 48, you better check out your process, because that means you're a chaser. And with that type of approach, you're probably going to sell it when it comes in versus being in a position to buy it.
All right. So it sounds like you're thinking not to chase the stock. Does this have any implications on Twitter?
Yes, well, there was a lot of money locked up in the private market of Facebook. They thought they were underwater, and they've gotten relief, okay? And they probably made money if they stuck to it. So right now, the investment bankers, hopefully they're not, foaming from the mouth and saying, oh my goodness, we could raise the valuation on Twitter pre-market, because then it won't be a successful IPO. So let's hope they learned from this situation. So I think the talk is anywhere between, 12 billion to 18 billion. Let's hope they keep it below 15 billion, so this way maybe some people not involved in the deal could make some money in the first few sessions versus having to go through the melees we saw with Facebook when it gets valued too high.
All right, well, there you have it. Scott's telling you to keep it real, investment bankers, when you're looking at your Twitter pricing, and also investors, keep it real when you're looking at putting new money with Facebook.